So we have a general S Corp question.
Uh,
Client wants to know, how do I pay myself with an S Corp and how does it save me money?
right. Actually, over the break for our navigators group, which is our premium, we actually had a S Corp workshop where I went through this whole thing at great length. But basically, the S Corp is an election. It's a tax filing where the company is going to file its own tax return of a special type, 1120S, and the difference is that when you have a net profit from an S corporation, that's going to pass through to the owner. So if I'm the owner of an S corp, I'm still going to pay my personal income tax on my total income, including the profit from this S corp. What changes though is that the profit is not subject to self-employment tax, which is the Social Security Medicare tax replacement. So if I have a sole proprietorship where I'm just operating myself as a business, or if I have a partnership, I do pay self-employment tax on whatever that amount is. So if I make $100,000 net profit, that's 15 grand with the self-employment tax if I'm a sole proprietor or if I'm a partner, but it's zero of self-employment tax if I'm an S corp owner. Okay, so that's a 15% difference, and that's huge, and it's just a big number. We see a lot of people, a lot of small business people, who are paying more in self-employment tax than they are in income tax. Now, it all gets included when you file your tax return. You end up with one number, but self-employment tax is one assessment, and then the income tax is a different assessment. Then they get added together. S corporation, the advantage is that you don't pay self-employment tax. However, Congress knows this, right? And so there's this reasonable compensation rule. And I spent 30 minutes on the workshop talking about reasonable compensation. But basically, you're supposed to pay yourself a reasonable amount for the work that you do for the company. And that payment is going to go through a regular W-2, just like if you were employed with a company you didn't own. And on that payroll, on that W-2 portion, you are going to pay payroll tax. You're going to pay Social Security and you're going to pay Medicare. So that's the clawback that the government has in order to get at least something out of you. Whereas the remainder is going to be net profit that is not subject to that self-employment tax. So that's how you do it. You just set up a payroll. And like with our clients, I think all of them at this point are all, we just set it up through QuickBooks Online. They are our preferred provider for that function. Usually, if we're also doing the bookkeeping, then obviously that's all integrated, very easy. But there's a million platforms out there that'll do it. We've had trouble with a few.
Mm.
Gusto used to be great and cheap, and then a couple of years ago, their customer service just took a dive. So we don't recommend them anymore. QuickBooks Online has been very functional. We had one client that we inherited from this acquisition that was on ADP. ADP has been jamming us up as far as transitioning that, and we've been stuck for the last 2 months. So I'm not too happy with them, but there's a lot of them, right? And I really strongly recommend that you do not do it yourself. I have never seen anybody do their own payroll and not screw it up. Use a professional payroll service. And yes, it does cost money, but part of the price of doing business. You'll still end up saving on the tax thing. And how much do you pay yourself? It gets into that reasonable compensation discussion, which again will take 30 minutes all by itself. But you want to be careful. A lot of people overpay themselves, which sounds surprising, but you want to be very mindful of what it is that you're actually doing, because as a small business owner, you're never just doing the thing you're selling, right? So if you are, I don't know, so let's say you sell chocolate, right? You're not just a chocolate salesperson, right? You're doing admin work, you're doing formula research, you're doing sales, you're doing marketing, you're doing collections, you're doing scouting different locations, you're doing all this other stuff to make the business work. And all those different things have different costs if you were to hire somebody else to do them. So that's what you want to think about when you're doing reasonable compensation analysis. And the company has to be able to afford it. So there's that.